fairly flexible and pretty well-defined rollouts that will leave it up to the governors in each state to decide how far and how fast they want to move.
Joe, in the meantime, President Trump has said something else that could potentially trigger, a constitutional fight, right? He's threatened the possibility of adjourning both houses of Congress.
Yes, this would be a rather unusual step. There is in a section, Article 2 of the Constitution, a section that suggests that in an emergency, when the House and Senate certainly unclear whether constitutionally this would meet the criteria for him to do that. He's also going to get, this would be something that really generates some backlash from some of his allies in the Republican Party, Majority Leader Mitch McConnell, who very jealously regards the prerogatives of the Senate. His complaint is that, and this has been true since about 2007, is that the Senate never actually adjourn. They continue in what's called a pro forma session. What can happen during an adjournment is that the president has the ability to make recess appointments to positions that would otherwise require Senate confirmation. And so he is trying to force through some nominees that have been held up in the Senate, in the Republican-controlled Senate for some time by using this process. This would surely, if he tries it, and it remains to be seen whether he does, it's something that surely would be going to the Supreme Court before long. The court during the Obama administration unanimously ruled that the president could not simply make recess appointments by declaring that Congress had been adjourned. This would take it to the next step further. So it would be quite a tangle if you went ahead and did it.
And Joe, President Trump also making it a point to bring Secretary Sonny Perdue to talk about the state of farms here in the U.S., saying that he's told the USDA to distribute China tariff receipts to farmers. How's the farming community here in the U.S. being affected by the coronavirus outbreak, and what would this do?
Well, the big problem for farms is the close down of restaurants, which are roughly half absorbing particularly a lot of the fresh produce. So there is actually plenty of food out there, but it's not really getting to the right places, and it's not always the right things. The president has promised additional aid for farmers who are suffering some effects of lost sales. There are areas, there are reports that farmers are pouring out milk or plowing under crops because they either can't get them harvested in some way, or there is not enough of a market as commercial food facilities shut down. So there's going to be some additional money going to farmers. Perdue talked about the U.S. government actually buying up some of the supplies and stocks that they have on hand. So it's still being worked out, but Perdue was up there to primarily assure consumers that there is not a shortage of food out there.
All right, our Congress editor Joe Sobchak with the latest out of D.C. Well, let's get to Karina Mitchell to get you caught up to date with the First Word headlines. Karina.
Good morning, Heidi. A new report from the Fed says the U.S. economy adopted a defensive mode as the coronavirus moved through the country, with activity contracting sharply across all areas and regions. The Beige Book survey says all districts report a highly uncertain outlook, with most seeing a deterioration in the coming months. The report is based on evidence gathered by the Fed's 12 local branches. Spain has reported the largest rise in coronavirus cases in 6 days, although the daily death toll has declined. More than 5,000 new infections were confirmed on Wednesday, taking the total close to 180,000, while fatalities rose to 18,500. The European Commission has drawn up plans for a partial lifting of restrictions, although Germany is set to extend its curbs. And Indonesia has expanded its virus lockdown around Jakarta to more than 34 million people ahead of Ramadan, due to start at the end of next week. The measures include a ban on gatherings of more than 5 people at religious and social events and a mandatory wearing of masks. The government is also ordering airlines to limit passengers to 50% of aircraft capacity to make travel more expensive. As South Korea seems to like President Moon's handling of the coronavirus, his ruling Democratic Party looks set for a resounding election victory, possibly taking 180 of the 300 seats in parliament. Moon's approval ratings have risen, and his party's focus on mass testing has earned widespread applause. If the final results back up the exit polls, it would be the first time in 12 years that Moon's party has an outright majority. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Right, we'll in fact get more reaction to the Korean election later in the show. We'll be joined by the president of the Korea Society, Thomas Byrne. But up next, what to look for this earnings season as the coronavirus continues to wreak havoc on the economy. We'll be joined by Wells Fargo Asset Management's Anne Milady. This is Bloomberg.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Well, as we enter one of the most uncertain earnings seasons on record, US banks are giving us a glimpse of what to expect. Shares of most of the largest lenders fell following earnings as traders assess the long-term impact of the coronavirus. Joining us now is a Wells Fargo Asset Management Senior Portfolio Manager, Anne Milady. And for the banks, it's clearly an issue of whether these loan loss provisions and how they're going to materialize, not in this earnings, which comparatively held up pretty well, but in subsequent results releases. But for the broader economy and investors, the question is, when you have so many companies either withdrawing or withholding guidance, is there any point to looking at year-end forecasting and company result forecasting when there is so much uncertainty? And if not, what do you do, in terms of looking for fundamentals to be able to invest on?
That's a really good question. I think investors are really trying to sort that out and trying to keep the focus on return. I think 2020 clearly was going to be a washout for earnings. We knew that as soon as the economy was shut down. And so investors, like our portfolio managers, are really focused on earnings normalization, cash flow normalization and the strength of the balance sheets of the companies that they're investing in today. And those are the most important things. And they're also tied to how quickly the economy can get started back up.
Is the question now, I mean, we know, what we do know is that governments around the world and central banks are doing whatever it takes, right? They're throwing all of their ammunition at this, and a lot of investors have said, well, if there's any kind of, potential risk, it could be to the upside if the virus comes under control and the lockdowns are lifted sooner than expected. But what do we need to hear from companies now? Is the focus for investors still on how bad the economy is going to be, or really do they need to hear from companies and how they feel about whether the stimulus is going to be able to positively support them?
Well, I think it's changed. The first round, or phase one of it, was what are you doing to protect your employees and protect your business model? Now it's moving toward what does your balance sheet look like, and what does your cash flow look like during this time frame? And then how long, if this continues, if the shutdown continues for another month, 2 months, 3 months, how long can you sustain the shutdown? That's clearly on investors' minds. That's what they want to hear from management. That's what some of the questions will be on the earnings calls. And then we're going to move to another phase, and that phase will be, did this actually strengthen your position, or did it weaken your position relative to your competitors in the market? And again, that's where active managers are really spending a lot of time making sure that they own the right companies on the other side of the storm. And there was a lot of secular change happening in the market ahead of this, and that secular change actually has just been accelerated.
It seems that we continue to see the same trend that we saw in the bull market entering the bear market, where it's also these big U.S. tech giants outperforming everyone else and really value stocks not making a comeback. So is this trend going to continue? And are there any winners even within those sectors?
Well, I do think the first place that investors focused was the tech sector, and it's no surprise because as so many of us are working remotely, and I just have to say congratulations to you all at the network. You're doing such a fabulous job and dealing with a lot of issues while doing it, but you're doing such a great job. But working remotely, we're teaching our kids remote learning, right, with teachers doing it from school, some parents doing it. Digital healthcare is happening, people having appointments with their doctors online, of course, more and more online shopping. So all of those are focused on the technology space. So it's no wonder why those growth sectors that are associated with so much secular change in our economy continue to be the places where investors want to continue to put more money to work. But I do think you touched on an important point. There will be areas when we start to see the economy come back on, those more cyclical areas of the market that will also be attractive to investors. We saw today some of the transport companies start to report in the U.S., and it is clear that transportation is still important. It's still a big part of the supply chain. It's cyclical, and many of those companies are considered value or value stocks, but those might be part of the winners as we exit.
How about sectors of the market that are very much dependent on consumers, on the American consumption strength? Because not only are we seeing a fundamental change with remote working, but also social distancing in the way that consumers behave, but also the eco data out of the U.S. today were just abysmal.
Yes, the economic data was nothing really short of disastrous. I mean, retail sales posted the largest drop on record, down almost 9%. I mean, that was more than double what we saw in 2008, the largest decline going back many, many years. But, you know, I think what we're seeing, again, is a shift, the secular shift in how consumers are consuming things. We're doing more and more things online, and I think that will continue. So the supply chain itself within the retail channel and how consumers are consuming is going to be changed for good. Yes, we will still go into stores once this virus is over, but there will be some retailers that never set up themselves well, never invested enough to focus both on an online presence and set up their supply chain to serve their customers both online and in store. And it'll be those retailers that benefit, the ones that did that made those investments, and the ones that didn't will not thrive.
Anne Mileti, always great having you with us. Thank you. Wells Fargo Asset Management Senior Portfolio Manager. Coming up next, Bridgewater Associates says the pandemic will cost the world $20 trillion. Our interview with Ray Dalio is next. This is Bloomberg.
Fuel, corn, livestock, precious metals. Commodities are everywhere. And so is Bloomberg. Bloomberg Commodity Indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
Well, shares of the largest U.S. banks dropped again in the overnight session. This is Bank of America, Citigroup and Goldman reported the pandemic's impact on their earnings. But a major trend is emerging, and that's trading desks are helping to salvage profit. Bloomberg's Sue Keenan joins us now with the details. So this was particularly true in terms of the trend for Goldman, which actually saw its trading business soar.
Yeah, in fact, their trading revenue came in at $5.2 billion. That's a 28% surge and beat expectations. It also served to offset a lot of the damage that it reported. It follows on the heels, as you may know, of J.P. Morgan also coming in with a very strong trading quarter due to the volatility. But if you look at the charts on how these banks did today, while Goldman ended higher, as opposed to Bank of America and Citi, it was down as much as 5% earlier in the session as it reported an almost $900 million hit, and that contributed to a 46% decline in profit. Let's hear from the CEO of Goldman about what's ahead.
There is obviously a wide range of uncertainty around forward projections given the unknown duration of the health crisis. The reality is that none of us know for sure. This is why it is critically important during this difficult period that we maintain a strong financial profile and remain agile and flexible.
Yeah, a lot of uncertainty. That seems to be the theme among all the banks, and they all have mirrored each other in showing large provisions for loan losses well over double what the expectations are. Bank of America saw first quarter profit drop 45% as they put aside $4.76 billion for potential bad loans. And while Citi's fixed income traders crushed expectations, similar to Goldman, Citi came in by more than $1 billion in trading revenue. That was more than wiped out by the $7 billion that Citi had to put aside for loan provisions. Sorry?
Right, and we do get Morgan Stanley reporting tomorrow, of course. We know that the company had a pretty strong start to the year with wealth assets and equities. What are we expecting for the first quarter?
Well, we do know, again, they're going to be reporting before the opening bell. And as you mentioned, yeah, they started well with a lot of wealth assets and equities, so those margins are expected to carry them a bit. The fourth quarter did suggest that they had some stabilization in their trading share, so there will again be a focus on how robust that trading revenue was as well. And it's important to point out that during the last major crisis for banks, the fact that trading added to the losses was a big part of prior declines. Now we're seeing they are actually offsetting a lot of the souring loans. So that's a big difference here. So traders are going to be continuing to be a focus point in these earnings. Next week we have a lot of the regional banks. And this time, so far, the trend appears clear that these trading desks that have been subject to many cuts are offering much-needed relief as these banks present their numbers.
Sue Keenan with the latest on bank earnings. We'll have more on Morgan Stanley's earnings later with CEO James Gorman. Plus, the outlook for Europe's banking sector. Allianz CEO Oliver Bäte speaks to Bloomberg exclusively. Let's get a quick check of the latest business flash headlines. Amazon is halting operations at warehouses in France for 5 days after a court banned sales of non-essential goods. Deliveries are being suspended through Monday after judges said the company isn't doing enough to protect staff from COVID-19. Amazon has been given 24 hours to comply with a ruling to sell only essential items such as food and hygiene products and to upgrade its security measures. Toshiba is to furlough 76,000 workers in Japan, around half the domestic workforce, in an attempt to halt the spread of the coronavirus. All local factories and Toshiba's headquarters itself will shut down from April 20th through May 6th. The decision follows a call by Prime Minister Abe for Japanese corporations to ask 70% of their staff to work from home. Google is pausing recruitment for the rest of the year as the coronavirus batters its ad business. Alphabet CEO Sundar Pichai says the pace of hiring will slow, although those already picked up will be able to start work. Employees are working from home and the company is covering pay and benefits for contract staff. It's not announced any job losses. At the end of last year, Alphabet had almost 119,000 full-time workers. GoPro has announced a widespread restructuring plan that involves cost cuts and job losses. It aims to trim $100 million off operating expenses this year, with another $250 million to come in 2021. GoPro is losing more than 200 jobs and aims to reduce office space and cut sales and marketing outlays. The company is withdrawing its guidance for the year and says it sees a loss of about 30 cents a share. And here's another check of the markets. We are seeing Kiwi stocks supported another day. 3 sessions of gains now, 1.2% upside at the highest in over a month. Nikkei futures and U.S. futures, though, under pressure. This as the S&P 500 sank from that 1-month high. We had dismal economic data here in the U.S., bleak retail, manufacturing, and home building data. Crude prices rebounding from that lowest level in 2 decades after the collapse in U.S. fuel demand. This is Bloomberg.
This is Daybreak Asia. I'm Karina Mitchell with the First Word headlines. The coronavirus has passed a grim milestone with global infections topping 2 million and deaths approaching 130,000. The news comes as the World Health Organization rejects criticism from President Trump and defends its work with China. The group says its mandate is to promote health globally and it will work with and for people everywhere, whether they're in China or anywhere else. A new study suggests President Trump's much-touted antivirus medicine doesn't work. A small experiment involving 150 patients in China showed hydroxychloroquine worked no better than standard health care and was more likely to trigger side effects. The research hasn't been reviewed by Western doctors, and more studies of the drug are underway. Meanwhile, India is planning to ease virus restrictions next week to reboot its stalling economy. IT hardware companies, farmers, and rural industries will be allowed to resume work as the government tries to exit the biggest lockdown in the world. The restrictions have been extended to May 3rd, but ministers will also lift curbs on e-commerce firms and allow the movement of goods from ports and airports. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg Sherry.
Bridgewater Associates says the virus pandemic will force a new order and cost the world economy trillions of dollars. Co-chairman and co-CIO Ray Dalio told Bloomberg the U.S. stimulus measures so far are appropriate, but more will be needed.
The holes to incomes in the United States, we estimate somewhere in the vicinity of $5 trillion. And the holes in the world economy is probably somewhere in the vicinity of $20 trillion. And we look at particularly who has what holes, and then how they'll be filled. So the economy as a result of this, so the real economy, which is goods, services, production, and all of that, in the world over the next year will probably have a fall of maybe 4 or 5%, which is a bigger fall. This is a bigger event than the 2008 financial crisis, and it's most comparable to the 1930 to 45 period of time in terms of, the size of the hole, the unemployment rates and those types of impact. And then we'll adapt. One of the great things about the greatest force is in humanity and the greatest force in productivity is the capacity of humans to adapt and change the way they're doing things. I mean, we're doing that right now. And so I'm pretty confident that the inventiveness, the adaptation will bring us to a new way of operating. And let's say if you take that decline, that'll be a peak to trough decline of somewhere in that magnitude, that will get past that. But it'll be a total new world order. The world won't resemble the world that we're used to. It's going to change in various ways. So it's a big hole. It's not a unsustainable hole because the capacity of producing money and credit is unlimited. It means that we have to look at what is the value of money and credit. Okay, that new world. What is the value of money and credit? What is a storehold of wealth? Okay, you just can't produce it without it having its effect on its value. And so while we talk about production, we'll adapt and we'll get past it. But how wealth will change will be very, very big and different.
I'm going to come back to that in just a moment. And I keep saying I'm going to come back to the things you're mentioning, but I promise I will, Ray. In your opinion, is what we've seen thus far in the way of fiscal stimulus from the federal government and monetary stimulus from the Federal Reserve appropriate? Are both of those organs of the U.S. government, if you will, doing what they should be doing? And if they're not doing quite enough yet, what else should they be doing?
Yes, in my reaction, there's no choice. It's like in the 2008 financial crisis, you're faced with a choice. Do you want those banks to exist in the future, or do you want to get rid of those banks? And they may have gone broke, and they may not have had enough savings, and they may have done even things that they should bear the consequences of. but you want to save the banks. And so this is a crisis that's similar, except it goes way beyond the banks. So when you start to think, who do you want to save, you have to think about, do you provide them with income, and how much do you deal with their balance sheet? And if you don't do that, the consequences are enormous. So the reaction needed to be of the sort. We have to think about the consequences, though, of producing all that money in credit. Where does it come from, and what does it mean? We'll turn to that in a minute. But it's just like in the Great Depression. You needed to do that, and you will need to do more. And we will argue over what we should do and who gets what. And that'll be our big discussion. But yes, there has to be more money in credit, and you have to operate in a way where you save important things, and that you only impose a certain amount of suffering on people that they can bear. Otherwise, you'll have a revolution, and you won't have productivity.
And that was Bridgewater Associates co-chairman and co-CIO Ray Dalio there, speaking with Bloomberg's own Eric Schatzker. Well, the European Commission says companies and workers won't get back to business as usual until there's a vaccine or a cure for COVID-19. But EU leaders have begun laying out a roadmap for a partial lifting of restrictions in an effort to try to mitigate the economic fallout. Our co-anchor Yvonne Mann has the latest. Yvonne, this is going to be a gradual and you'd imagine sort of stop-start type of easing process. What are the conditions that the EU are looking at to be fulfilled before any kind of lifting of lockdowns could occur?
Yeah, I think it's safe to say we're not even close to getting back to normal just yet until we see some type of cure for COVID-19, according to the European Commission. But this is going to be phased in, and at least right now, they've laid out a plan on how this is going to be lifted, these gradual exits from these lockdowns, which the Commission president highlighted in saying that the three conditions that they're looking at right now is that infections have had to decrease significantly for a sustained period of time. Hospitals have to have enough beds, intensive care units, medicines and equipment, and there's a large-scale capacity for testing and a continued effort to continue to expand that type of testing so they can monitor the spread of this virus, tracing as well as quarantine carriers as well. So before they even, and once they do meet those restrictions, I should say requirements, then they can start thinking about creating a tracking system to look after people using mobile apps, also maintaining social distancing measures. So there's still some restrictive measures that we've seen that are still in place, and especially for the elderly, which continue to be a high risk. And then you have to be able to then start thinking about lifting travel and border crossing restrictions. And then maybe then later on, you start thinking about incoming travel from non-EU nations, which will be phased in later. So Germany certainly is a good example of that. We've seen Angela Merkel, she has extended those restrictive measures up until May 3rd, but she is thinking about starting to reopen some of these smaller German businesses for now, perhaps then start thinking about opening up schools. But when it comes to large gatherings like concerts, festivals, soccer matches, those are not going to be reopened until before the end of August or so, and before we can start thinking about actually letting these types of social gatherings take place once again.
So what are we seeing in terms of infection curves across the European Union?
Right. So it really depends on where each country in Europe is dealing with this infection curve, whether they can actually take a different approach when it comes to lifting these lockdowns. In Italy, we continue to see signs of this stabilization, reporting the fewest new virus infections in 4.5 weeks. We have heard from Italy saying that they are looking at lifting these restrictions, some of them at least as early as this week. Spain as well, but we did see we did see new infections actually spike up the most in the last 5 days or so. So clearly not out of the woods just yet. And France in particular, we saw one of the deadliest days, a couple of days that we've seen for some time.
Right, our Bloomberg Markets co-anchor Yvonne Mann, thank you very much for that. And we do have an alert on the Bloomberg this about BAIC Motor. This is a car maker in China, now reporting preliminary first quarter net income falling 95% year-on-year. This because of the COVID-19 outbreak. They're reporting net income for the first quarter falling 95% on year, saying that production and operation have gradually resumed. Of course, we have seen car sales really plunging in the first quarter of this year for China. The China Association of Automobile Manufacturers saying that it fell 42% in the first quarter of 2020 compared to last year, and we're now getting the latest numbers from car maker BAIC. European Commission Executive VP Margrethe Vestager speaking exclusively to Bloomberg about possible coordinated aid for European airlines and how to protect businesses hit by the pandemic.
It depends quite a lot on how long this will take. The first sort of wave of measures was, of course, liquidity. Enormous amounts of liquidity have been made available. It may be so that later recapitalization may be needed. And here we're just consulting on common European framework if that is needed in order to make sure that if member states would want to recapitalize businesses, that it's done in the same way, that we maintain a level playing field, that we try to limit the distortion of competition. Well, we've had quite positive response to that with member states, but it will take still some days before we're ready to launch it.
You did turn a few heads with your interview with the FT a few days ago in which you advocated for states taking stakes in companies in order to keep China from taking over some of those companies. Is that how you feel still a few days later, Commissioner?
I think it's very, very important that we are vigilant because we have come into this health crisis in different points in time. We are suffering from it to a different degree in every point in time because things develop. You see some countries, they open, some countries are still deep in the crisis and people are really suffering. And that also means that in the economic recovery, some will be stronger before others have fully recovered. And that, of course, gives the risk that businesses may be vulnerable for a hostile takeover. And I think it's very important not to be naive in these days because a number of sectors, they are strategic. A number of sectors are indeed needed. And here I think it's important both for the businesses to know that the states can step in if they want to and if need be, but also for the potential people who want to do a hostile takeover that we are vigilant and that we will use the tools that we have available.
Commissioner, kind of picking up on that, you have in place at the moment a temporary framework that is allowing greater flexibility when it comes to the state aid rules to protect businesses that are being affected by the virus, to protect businesses that potentially could be subject to such a takeover. I'm wondering how long you see that temporary framework being in place and when the sort of the temporary element ends, whether or not you see needed changes to the current longer-term framework when it comes to competition within Europe?
Well, first and foremost, we have already changed the temporary framework once to enable more aid to coronavirus research, production, to make sure that businesses who change their production into, for instance, protective gear, that they can get a no-loss guarantee. Now we're in the process of changing it to enable recapitalization in a way that limits distortion of competition. But the entire framework is set to be in place until the end of the year. But of course we will evaluate when we get on the other side of summer if it's needed to be prolonged. At the same time, we're in the process of looking into all our rules and guidelines in order to make sure that they are fit for purpose, because it's still a digital economy. It's still an economy where automatization, technology is changing not only how we produce, but also business models. And it's very important that competition rules are fit for that purpose. And that, I think, will be as relevant on the other side of the corona crisis as it was before.
That was the European Commission Executive VP, Margrethe Vestager, there speaking exclusively to Bloomberg. Well, coming up next, still awaiting final results, but South Korea's ruling party looks set for a pretty big victory in the national elections. We get the very latest on that. This is Bloomberg.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
The election in South Korea seems to have resulted in a big win for the governing Democratic Party of President Moon Jae-in. Many saw the vote as a referendum on the government's handling of the coronavirus crisis. Let's get some insights from the Korea Society President, Thomas Byrne. Tom, great to have you with us. It seems to be quite a turnaround for President Moon Jae-in, right? Because going into this pandemic, there was a lot of criticism that he didn't close the borders with China soon enough. And now he's being praised for actually handling the virus outbreak very well. So was this a reflection, was the election a reflection of what happened afterwards?
I think it was. Actually, what happened was that, well, first of all, Korea responds well when there's a crisis. I mean, Koreans really have grit. They respond well. You know, from my experience, they responded very well to the 1997 IMF Asian financial crisis. They're responding very well now. So they have a bunch of institutions and government organizations that really went through a similar experience in 2015 with the MERS virus. And they were very vigilant. They were doing things earlier than I think even the politicians. So many politicians were kind of slow on the uptake on this. But everything came together really quickly in the middle of February. So the government has really orchestrated a very good program where it's the government, the public health institutions, and the citizens all chipping in, all three of them together, to manage this crisis very well.
We're now expecting to get another extra budget from the South Korean government. This, of course, after an already $10 billion package. How much political capital will President Moon Jae-in get now to do, to really put in place all of his economic priorities that he has set forth when he came into office?
Yeah, a lot of it will depend on the precise number of seats that the Democratic Party and its affiliated parties get, its partners. Now, they need the 300 seats in the National Assembly. They need 60% or 180 for a semi-super majority where they can get many bills through quickly. For a super majority, they need 200, two-thirds of the 300 member National Assembly. I don't know if they'll get that many, though. They might get somewhere between close to 180, though, which would really help out President Moon get his agenda enacted.
Thomas, is this something of a potential opportunity for a reset for Moon, particularly as he kind of seeks to convert this potential leverage out of this election to be able to truly reshape the economy the way that he's, previously campaigned on?
Well, President Moon has really struggled with his income-led economic policies. When he came into office, GDP grew 3.2% in 2017. It slowed down to 3.2% rather in 2017. Slowed down to 2% last year. This year, who knows what it's going to be? Maybe not as bad as advanced countries in the U.S. It's predicted contraction. It could be flat. But the priority would just be to get the government running, and then he can take on his, the progressive policy agenda that he has.
In terms of what specific, post-election, policies that we're expecting, is there a split between what fiscal policy, we're talking about this potential extra budget, will be done in the immediate aftermath of getting the economy back on track after the global pandemic eases, and how much of that, these sort of social welfare policies, might be sustained after this immediate aftermath period?
Well, for the first time, South Korea is actually in their fiscal stimulus, the supplemental budget's the fiscal stimulus plan that they have for the coronavirus problem shock. They're giving out cash transfers to citizens. Now, we're doing that in the U.S. We did that back in the global financial crisis. This is something new, but it's something absolutely necessary because unemployment has gone up in South Korea. So there'll be probably more of these, and if they do get a supermajority or a semi-supermajority, however you want to describe the 180 votes, the composition of these packages can be more tailored towards the agenda of the Democratic Party.
Now, North Korea firing a barrage of missiles on the eve of the election. Tom, do South Koreans care at all at this point, given so much going on over the virus outbreak, not to mention the economy?
I really, these aren't, wherever that red line is, I don't think any of this has come close to the red line. They're ballistic missiles, but they're not long range. They're not the type that you could fit a nuclear warhead on. But this is, business as usual for North Korea. They've been doing this over and over again, since the Hanoi summit failed. But do South Koreans? No, South Koreans, were, hopeful that there'd be engagement in North Korea. That has dimmed, to say the least. I think South Koreans are mainly concerned about the pandemic. The government's response, their ability to recover from the pandemic.
Thomas, thank you so much for joining us. Korea Society President Thomas Byrne there with us, taking a look at these election results. And we'll get more on the Korea election later. The IMF Mission Chief for Korea, Andreas Bauer, joins us at 10:10 Hong Kong time this morning. And after that, at 11:30 Hong Kong, we'll be speaking to the Seoul National University Professor of Law, Jae-min Lee. This is Bloomberg. Let's get you a quick check of the latest business flash headlines this hour. Honduras set to lay off thousands of salaried U.S. employees and support staff for 2 weeks, expanding virus cost-cutting measures that initially affected only production workers. Honda employs about 31,000 people in the U.S. and says the pandemic is stopping buyers from purchasing new vehicles. White-collar staff in California will be furloughed first, followed by workers elsewhere from this weekend. Car sales in China have risen for the first time since the coronavirus outbreak, with drivers buying an average 33,400 vehicles a day last week. That's up 14% from a year ago, but still down 12% for the first 2 weeks of April. The head of the China Passenger Car Association says the market is recovering, but he doesn't expect the world's biggest auto market to stabilize until at least July. Well, China's beleaguered H&A Group has escaped domestic bond default after a hastily arranged creditor meeting. The heavily indebted conglomerate gained enough support from creditors to extend a local note worth around $55 million that was due Wednesday for another year. Bond holders were given just half an hour by the government to make their decisions. All right, let's check in on Asian markets, where we are looking like Asian markets will follow the US session lower this after the S&P fell from its highest levels in about a month. Australian futures are looking like this. We're bracing for those March unemployment numbers, which are due to look pretty ugly. New Zealand, though, extending those gains for a third session, trading the highest in over a month. This as we are getting news that New Zealand could be on track to exit its lockdown as of next week. Nikkei futures looking pretty dismal as well, although the Nikkei is up pretty close to 2% from its March low. Lots more to come. This is Bloomberg.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Who shaped my views were the women I talked to.
I think Facebook's probably won in a lot of ways.
Running Microsoft was a ton of fun, and it was, it's kind of inspirational.
This is your weekly review of the most important business news and interviews from Bloomberg Television around the world.
Enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Good evening from Bloomberg's global headquarters in New York. I'm Sherry Ann.
And I'm Heidi Stroud-Watts in Sydney. Asia's major markets have just opened for trade. Welcome to Daybreak Asia. Our top stories this hour for you. Asian stocks set for declines on weak economic data as the coronavirus marks a bleak milestone of 2 million infections and more than 130,000 deaths. The virus maintains the pressure on oil. Prices fall to their lowest in 2 decades as demand for fuel collapses. US futures dropping below $20 a barrel. And pressure too on jobs. Data from Australia this hour could show the unemployment rate headed for 10%, with almost 1.5 million people out of work.
Let's get you started with a quick check of our markets are kicking off trading in Japan, South Korea, and Australia. Japan, the Nikkei coming starting with a downside of 1.4%. Same for the Topix, declines of more than 1%. We had seen a little bit of weakness across the Japanese yen, holding at that 107 level. This, of course, as we continue to see the latest economic impact coming from the coronavirus pandemic. The IMF right now coming out and saying that they see the use for capital flow measures in Asia during this pandemic, saying that Asian countries should make use of those swap lines, that Asia-Pacific economic growth is at a standstill in 2020. This, of course, following the IMF earlier this week saying that the great lockdown recession globally would be the steepest in almost a century. Take a look at the Kospi right now. It's coming back from election day in South Korea. The Kospi down 1%. This after exit polls show that South Korean President Moon Jae-in's ruling Democratic Party is poised for a stunning victory in parliamentary elections. We're talking about the first time in 12 years that party would have an outright majority in the National Assembly. The Korean won trading at that 1226 level. And of course, this as we continue to see South Korea handling the coronavirus outbreak and perhaps the success of Moon Jae-in's party, really a reflection of how successful South Korea has been in reining in this virus crisis. Heidi.
Yeah, and Jerry, let's take a look at how we're setting up when it comes to the start of the trading session here in Australia. We're seeing pressure when it comes to Australia. Of course, we're getting those March unemployment numbers out today, bracing for a pretty ugly print as we look at just so many services, restaurants, tourism, travel, education being shuttered across the country, of course. We are also taking a look at the Aussie dollar, which plunged after that record bond sale that we saw in the overnight session. We're also seeing some upside when it comes to trading in New Zealand, though. We're hearing from the Deputy Prime Minister, Winston Peters, in New Zealand, saying the country is on track to exit its lockdown next week. New Zealand has had great success with what has been one of the strictest lockdown schemes in the world. Flicking it over to individual stocks that we are watching, Crown Resorts is one that we are watching today after the casino operator secured a 560 million Aussie dollar facility from banks, as well as close to $500,000 in project financing facility to help build a gaming resort in Sydney. The company also updating, saying that it stood down 95% of its workforce. That's more than 11,500 employees. Sherry, so we continue to see really the fallout play out here when it comes to some of these companies that are affected.
Yeah, let's discuss the Asian market outlook. We're now joined by Ben Powell, BlackRock Investment Institute Chief Investment Strategist for APAC. Ben, great to have you on the line. IMF coming right now and saying that Asian countries should make use of swap lines, that they see the use for capital flow measures in Asia during this pandemic. Of course, we have seen already the strength of the U.S. dollar being beat up given the safe haven move. How will this impact South Asian markets overall?
Good morning. So I think you identify an absolutely essential aspect of the current situation, which is the availability of dollars, not just within the American financial system, but globally. And I think the pace and the scale of response, most obviously from the Fed, but also global policymakers more broadly, to try to speak to an array of problems, but specifically this one. The Fed, back in 2008-9, it took several quarters to get some of these global dollar swap lines organized. The Fed has achieved this in days this time around, which is quite extraordinary. So I think the steps that the Fed has taken over the last couple of weeks should help address this exact vital problem of making sure that there are enough dollars flowing through the global and Asian financial system to help economies continue to fund. Because, of course, the Fed isn't just the Reserve Bank of America, it's also the de facto Reserve Bank of the world's trading and economic system.
And Ben, of course, we continue to see improvement in economic data out of China. Will that help keep the Chinese renminbi supported, or will the strength of the U.S. dollar really offset that? And what does that spell for the market?
So I think the Chinese currency has been very interesting in that it's been rather stable over the last several weeks and even months, even when the virus was centered in China itself back in February. So I think China, even with the rate cut that we've seen over the last few days, still has a fairly dramatic interest rate differential with the US, which for me suggests that the Chinese currency should remain rather stable. In terms of your broader question about China normalization, I think it is extremely important, obviously, for China itself, in terms of the PMI picking up to suggest there is this normalization. It's not going to happen overnight, but people are returning to work and are returning to spending and so forth. So, of course, that is very, very important for China. But it's also, in a way, it's a postcard from the future as we think about economies like New Zealand and other European countries potentially looking to open up their economies over the next weeks. China is something of a template for how quickly economic activity can normalize and give us a sense of the alphabet question, whether it's going to be U, V, W, or some other letter.
Yeah, it's alphabet soup when it comes to predicting that trajectory of the recovery, right? Does that mean that if we get a quicker and more robust and sustained recovery out of China, that there's more positive risk to the upside, particularly when it comes to emerging markets? Because as we spoke about, as Sherry, spoke about, was the stability in the yuan. If that continues, if Chinese assets continue to remain stable, that anchors EMs to a certain extent, doesn't it?
I think there's definitely a couple of helpful things for emerging markets. One we touched on at the beginning of our conversation, which is dollar liquidity. So with the Fed now providing large quantities of dollar liquidity globally through those swap lines we talked about, that is extremely helpful. And secondly, as you say, if China is doing better, and I think there will be more stimulus to come, by the way, even as the economy normalizes. So we've already had a couple of rate cuts. I think there will be fiscal stimulus to come. So that combination of dollar liquidity and China recovering is normally quite constructive for emerging markets more broadly. So we at the BlackRock Investment Institute, we are overweight emerging market bonds in the local currency space, and we are overweight Asia ex-Japan equities. And a large portion of that really is to do with this recovering China, because China has the scale, the capacity and the will to bring about whatever it takes, if you will, whatever it takes style stimulus to get that economy back to more normal levels.
Ben, in an environment where you see recession being priced in 100% for the US, the IMF basically saying that economic activity everywhere is coming to a standstill, and yet markets are bouncing back into bull territory. What is a contrarian view these days?
That's a tough question, because, as you say, the news flow still remains extremely bleak in terms of economic activity, retail sales, unemployment. We're going to see Australia later, but it's a global phenomenon. Perhaps tens, maybe even hundreds of millions of people have lost, hopefully just for a very short period of time, but nonetheless have currently lost work. So given that context, you would think a constructive framework would be contrarian, but of course US equities have just had an astonishing 25% or even a little bit more rally. So the BlackRock Investment Institute, we have upgraded credit to overweight. We are overall neutral risk, but we are, I guess, gently adopting a more constructive tone with our upgrade to credit just a couple of weeks ago. So we are overweight global high yield, and as I mentioned, overweight emerging markets, local currency debt. So I think those, I don't know if they're very, very anti-consensus, but I think they are still interesting given the concerns and reality of economic slowdown that is ongoing.
Ben, appreciate your time. Ben Powell, BlackRock Investment Institute Chief Investment Strategist for APAC with us there. Well, still ahead on Daybreak Asia, oil up in just the first few hours of Asian trade, but of course still remaining under pressure despite the OPEC Plus deal. We'll be asking what's needed, what more is needed to drag these prices out of 18-year lows. Plus, Aussie jobs on tap expected to show the damage from the coronavirus. We'll be previewing the data with the Westpac Chief Economist, Bill Evans, will be with us. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
You're watching Daybreak Asia. I'm Karina Mitchell with the First Word headlines, and we begin with the coronavirus, and it's passed a grim new milestone with global infections topping 2 million and deaths now more than 130,000. The news comes as the World Health Organization rejects criticism from President Trump and defends its work with China. The group says its mandate is to promote health globally, and it will work with and for people everywhere, whether they are in China or anywhere else. President Trump has for now dropped plans for a task force to restart the U.S. economy, launching marathon calls with business and health leaders instead. Corporate figures such as Tim Cook and Jeff Bezos are being asked for advice on how to bring the country back to something like normal after the pandemic. Several of those involved say they only discovered their participation after the president announced their names. Meanwhile, South Korea seems to like President Moon's handling of the coronavirus. His ruling Democratic Party looks set for a resounding election victory, possibly taking 180 of the 300 seats in parliament. Moon's approval ratings have risen, and his party's focus on mass testing has earned widespread applause. If the final results back up the exit polls, it would be the first time in 12 years that Moon's party has an outright majority. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Heidi.
Karina, the Trump administration is considering paying U.S. oil drillers not to pump at all. That could mean compensation for companies to sit on more than 360 million barrels worth of reserves. Mike McGlone is a commodity strategist at Bloomberg Intelligence and joins us now. Mike, we've been talking all along, for all the focus on the OPEC Plus agreement, it doesn't mean a lot if we don't see the reduction in output on the U.S. side as well, right? So in terms of what is at play here, a pretty extraordinary proposition, but we are in extraordinary times for this oil market.
Yeah, we certainly are, and that word is key, extraordinary. But I think what the market's done is it's really doing most of the rebalancing itself. It's gone back to 20, and WTI crude oil 20 is the most widely traded price since the beginning of futures in 1983. So it's gone back to a key level, and what you're hearing is the trickle down. I mean, the government, every entity is trying to reduce supply, but they're just catching up to demand. Now, we heard today from the IEA that demand should drop around 9 million barrels a day, which is around 9 to 10%. I think that's very conservative. We should probably expect a demand drop of closer to maybe 15 to 20% on the year. So, but the market's already adjusted. One thing to keep in mind is WTI crude oils on it have down 66% so far this year. That's the worst year in its history. So I think the market's just stabilizing around 20, and it should be trading around this range for a long time.
What are we seeing in terms of the glut right now across the U.S.?
Yeah, well, the glut's quite extreme. One thing that came out today was U.S. Gasoline demand, and it dropped almost 60%. Now, that's short term, but it might not come back to where it was before, which is, it might take a long time, if ever, because it was already in decline the last few years. Remember, even before this year, gasoline demand in this country was flat over 20 years, partly because of conservation and EVs, and people just don't use as much anymore. So to me, that's what's really changing is before COVID hit, the demand versus supply situation for crude oil was already bad. But what this is doing, it's going to reduce U.S. production. The thing is, within about a month, supply is going to be backed up. But I think when people should look at this is crude oil is a big example of just how bad this demand destruction is globally. And that really hasn't showed up in the stock market yet.
Mike McGlone, thank you. Bloomberg Intelligence commodity strategist. Plenty more to come on Daybreak Asia. This is Bloomberg. Data from China suggests most people with symptom-free COVID-19 cases never get sick, challenging earlier assumptions about how the disease develops. Bloomberg Markets co-anchor Tom Mackenzie is with us from Beijing. Tom, this is a really puzzling feature of this virus, right? One of the key reasons why perhaps it spreads so fast and in so many places.
Absolutely. A key reason why it spread, as you say, so fast and so far. And it's the first time that we've seen this data from China that they've publicized a breakdown of asymptomatic cases in this country. And what they found, according to this data, where they looked at 6,764 people who tested positive without showing symptoms, only a fifth of them have so far developed symptoms. Some are still being monitored, but you're looking at almost 4,500 people out of that 6,700 or so who have been discharged after recovering from the virus. And as you say, researchers had earlier thought that most patients who weren't showing symptoms would ultimately end up developing those symptoms. This data suggests, at least on the surface, that that isn't the case, and many remain symptom-free. And again, that underscores the challenge of containing this pandemic.
Tom, China's increasingly becoming the target of attack again now by US Republicans over the handling of the crisis. The initial, I guess, seemed to be a cover-up. How does this fit into a broader strategy and, I guess, bilateral relations?
Well, it looks like we are seeing now a coordinated strategy by the Republican Party to, as you say, shift the blame to China. As Trump, of course, faces increased criticism over what many would say are his administration's failings in terms of how they respond to the crisis and the health impact, the economic toll, of course. So we've seen, for example, the Trump campaign has sent out a fundraising email that accused China of lying about the outbreak and saying the country must be held accountable. We've seen some Republicans trying to introduce bills to make the Chinese government liable for civil claims in U.S. courts, and Democrats have tried to defend Chinese people, have on occasion been attacked by Republicans and even labelled as Chinese assets. So it looks like the Trump campaign team and the GOP are, as you say, going back to that tried and tested anti-China playbook that they used in 2016, partly, of course, because it played very well to the base.
All right, our Bloomberg Markets co-anchor Tom Mackenzie there in Beijing with the latest. Well, the founder of the world's largest hedge fund says the pandemic will force a new order and more stimulus will be needed. And as a result, Bridgewater Associates' Ray Dalio told Bloomberg that investors should steer clear of government debt, possibly for years to come.
This period, like the 1930 to 45 period, is a period in which I think you'd be pretty crazy to own bonds. Okay, because what is a debt? A debt in a fiat currency is a promise to receive currency, and